I mean, I probably would have had, yeah, I would have had all of them. I would have had all of them hit, honestly. Mm. Yeah, of course the Bears couldn't hold this or nothing. Of course the Bears couldn't hold this. Mm. Nobody wants to hear that shit. All right. Mm. It's probably like highly unlikely that it comes all the way back. Yeah, that shit is going up, man. Unfortunately. Mm. Hey, what's up, MB? What's your question? Mm. Okay. So MB asks the multiple Ninja Trader 8 trades. How do you make it possible as applying one trade and another tends to close all trades? Hmm. So if you're referring to copy trading, oh, okay. So all right, so you're talking about sell limit, buy limit, etc. Hold on. Let me try to really understand what you're asking. Is how do you make it possible? I'm not even aware that Ninja Trader had a bug, honestly. I'm not even aware of it. You said on my screen? If you're talking about this right here, this is an ATM setup. That's all this is. If that's what you're talking about. So these are sell limits, and this is a sell stop. If it says if one of your limits orders fills, the other limits close. Okay, let's look at that. No, no, no. Mm-mm. Yeah, I didn't know that. Yeah, I haven't had a problem like that in Ninja Trader 8 since using the product itself. I've had problems like that with Trader 8, but not with Ninja Trader 8. Oh, you don't? Okay. Yeah, honestly, when I trade, because I'm so used to using ATM strategies, I can't use market orders. I haven't used a market order ever since I started trading this way. It just seems so weird. So blowing funded accounts. Now, I mean, I blow them too, but I only blow accounts when I trade on tilt. But when I'm not trading on tilt, when I'm trading my trade plan, it's hard for me to even lose a trade. Um, I'll start doing the NA meetings next week. I just wanted to take a break from them because they are time consuming. But I just wanted to take a break from doing them. But I will start back up next week. But uh, usually when it comes to finding a good trade, I'm just in the strategy that I use just to find good trades. is the first thing I look at is obviously just the structure. I use tick charts. I use an 1800 tick chart on the Nasdaq and a 1000 tick chart on the ES. They're very similar to a minute chart. If you prefer a time-based chart, they're very similar to a minute chart. I think I've had several people say, "Oh, you're trading a minute chart." It's very similar, but it's not. It's a tick chart. A tick chart is measured by volume transactions. So every 1800 transaction forms a candle until it gets to a new one. So this is a volume-based chart. Now, what I look for is I try to identify where the middle is and where my edges are. And if I can identify that, then I can formulate a plan. I know not to trade the middle, but if you trade the Nasdaq, you can get away with trading the middle. You can. If you're trading or if you're focusing more on the ES, you know that you should never trade the middle. You'll become liquidity real quick. So when it comes to not blowing funded accounts, what I found kept me in accounts longer is emotional management is 1, trade management is 2, formulating a plan and just executing that plan. And either it hits your stop or your TP. If you don't have your emotions in check, I find that keeping an account for a consistent amount of time is difficult. Like today, I was very proud of this trade right here on the Nasdaq. I was able to catch the break of 285. I was able to catch this break right here, and I made 9K on this leg right here. I was able because I saw that they was forming support right here. And they kept bouncing it at this level, 285. They swept 285 and then they found support on 285 and they kept bouncing it and bouncing it. And I was like, you know what? I bet if they come back down here to 285, I bet it's not going to hold. So because I told myself that I had to wait until price come all the way down here, I had to trust that my analysis was right. Once I saw the break of the structure, I got in short. Now, I got in short. Initially, I started a 4 mini contract position, but then I told myself that I'm going to add an additional 4 if I see a flush. So initially, it started consolidating, but I was like, you know what? No, I trusted my plan. I had my stop, I think, above this candle high. And if I was wrong, I just would have got stopped out. But good thing I wasn't wrong, because I was able to catch this drop and I was able to scale into this drop and I was able to make 9K today. And I think that's a good example of just recognizing what's going on in the market, recognizing that an area where if one side of the market fails, we're going to see a breakout. And once you identify that area, formulate your plan and execute it. Now, obviously, there's going to be times where you formulate a plan and you'll still make a mistake somewhere. You'll still end up losing. You may get stopped out and price go in your favor. You know, in those situations, you got to not allow yourself to get emotionally caught up. And if it does stop you out and then you see price do begin to trade in your direction, having a backup plan, having already a limit down here waiting to go just in case, because you know the Nasdaq loves doing that crap. She likes to stop people out and then she likes to go. But like I said, I was glad I was able to catch this, and I was trailing this thing as it went down, managing this position, trailing it because I was super heavy, and I didn't need to catch the top. We actually talked about this on stream before I got off, that if 380 didn't hold, that they was going to go to 420, and 420 was going to be the deciding factor for the Nasdaq, and it got to 419, 420 maybe exactly. Yeah, I think so. Let me see. So the high, this wick right here was at 419. And once I saw that it rejected 419, I just waited for that break here at 285 to get in short. That's all I did. Recognized where I was going and formulated a plan and executed. Hope that answers your question. Let me actually just write that down. Let me write that down. Okay. And so I guess the first thing that we want to do is the first step you really want to do is just analyze what's going on in the market. Yeah. Yeah, so you want to analyze what's going on in the market and identify if the market is currently trading in a range or if it's about to break out of a range and begin to trend. We usually have trend days after we get a range breakout. The market doesn't just start trending. A trend day usually starts after it breaks out from a range. A good example, let me see if I can. You see that? You see every time we get a range breakout, that's when the market trends. It just doesn't start trending. So we need to identify if the market is in a range and if it's at the high of that range or the low of that range, and if it could potentially break out from that range. Because once we see that range breakout, then we see the market start the trend. And once the trend is done, the market goes back into a range. So, I mean, that's all the market really does. Trades in a range, breaks out from that range, starts to trend, and then it goes right back into a range. So that's what we want to identify first. And once we kind of identify like what kind of day or what's happened in the market, you got to pick what side of the market you want to trade on. When I first started out, I only traded on one side of the market. Now you'll see me go long and short now, obviously, because I have a better understanding of the market, but the market mechanics is still true. If I'm trying to short on a bullish trend, obviously I shouldn't get comfortable in that short. Obviously, any pullback is going to be short-lived because it's going to get bought up by the bulls, because obviously the momentum is to the bullish side. So for newer traders, for traders that doesn't have, I guess, the eye for the market, I would recommend only trading on one side and just waiting for the pullbacks. Because if you can't get in and out of a trade, if you're counter trend trading and you don't get out at the right spot, you can be up and then out of a moment's notice, you can get stopped out for a loss, having a green trade turn red. So just picking what side of the market and just sticking to that side will always be a great strategy. Professionals do it too. More experienced traders know to wait for the right opportunity, because as you get more experienced, you start to trade more size. Muhammad shared today that he trades 200 lots. Yeah, now I'm starting to think he's an oligarch or something like that. But he trades at 200. He trades 200 lots. And today I was in the sim trading 200 lots, and I was up probably a few points, and I was up 30, 40, 50K. And I was like, wow, it really changes my perspective on, how traders with bigger size, how they think about the market, because they can't sit here and play around with their stop loss. They can't sit here and trade when the market is not doing anything, because they have a lot of size. And if the market is not moving, well, their money's not moving. So I'm going to make the assumption, because if I'm trading 200 lots, I'm not worried about what's happening here. I'm going to look solely at the edges, so my money can do the most work. I'm going to be looking for trending markets. I'm going to be looking to see where the market can break out. And if we do get a breakout, if I'm trading 200 lots, I'm waiting for a confirmation for a retest. But because I trade smaller size, I don't have to think that way. But again, that has opened my eyes to, if you're trading bigger size, it really does. You really do kind of cherry pick your trades. You kind of get that quote unquote A+ setup, or that A+, that A+ setup, and you stick to it. Because when you're trading size, I mean, all you need is a few points and you've made your week. If you have like maybe 2-3K goal, you can make that with size and a small move. So yeah, just pick what side of the market you want to trade on and stick to it. So focus on shorts on bearish days, and focus on longs on bullish days, obviously. And trade the edges on range days. And honestly, I would still stick to that strategy even on a range day. If the market is trading in a range, get out at the if you prefer to be a bull, get in obviously at demand and take profits at resistance. Leave a potential runner. Scale your profits. The market is going to probably come back to your point of entry on a range day. Get back in, play the range. It's just that simple. And the third thing is emotional management. Emotional management. Have a goal. Have a plan. Have a why. I think coming into the market with a mindset stating that there's going to probably be situations where kind of like today. Today was definitely when I was trying to get a long on the ES and I got stopped out twice. I got stopped out twice on the ES. Where was it at? Where was it at? I think I think it was this, or was it this? It was either this leg or this leg where the market was set. Yeah, I think it was this leg right here, because I remember. Well, anyway, the point is, I saw that the market was setting up for a long, and it stopped me out. And then it set up for the long again, and then it stopped me out, and then the long actually worked. Now, I could have got angry and, I'm not going to sit here and say that I didn't, but I didn't overreact. I just went to the Nasdaq, because obviously the ES was chopping around, and for whatever reason, it was liquidity hunting. The Nasdaq, on the other hand, I was able to catch this move going to the upside. I did make a mistake, which almost cost me the account right here. I was able to catch this long right here. And as I was scaling in, I made the mistake of moving my stop back, and I almost lost my account in this leg right here. And that was 100% habit. I'm glad that I was able to identify that earlier today. I was thinking about that off stream too, because I was like, I guess I guess I do. Because I trade small, because I was trading smaller size, I would give myself more wiggle room. But now that I'm trading heavier size now, I have to leave my stops where they are. Yeah. Because I took more than the loss that I should have. I almost lost the account. If this move didn't happen right here, this move is what brought the account back. But again, this was another situation where I identified an area of support. I got right back in, and I was able to get my account back. I think I was maybe $1,000 away from drawdown, because I think I lost 5K in this move right here from moving my stop. I think I lost 5K, and I was able to get it back with this move. So, yeah. Having a goal, having a profit target. So I've been doing really good in these Apex accounts by just having like a one trade rule and just kind of coming in day by day instead of trying to get the whole 20K in one day. Right now, I think I'm up like 13K in this account. I have 7K left. And I've been doing that just by taking good trades. And once I'm done, just closing out the account and not getting back into it and trading. I will say that that's been challenging. It's been challenging. The market's been moving, and it's easy to feel that, man, I just made 3K today. I can go back in and make some more. It's easy to feel that way. So I messaged my trading partner a lot and said, like, man, I'm fighting demons over here because I don't have any more accounts to catch that drop, or I don't have any more accounts to catch that pop. And I do find myself trying to come back to my work desk to get back in the markets and play some more. And in the moment, I'm trying to convince myself that, yeah, I should go back in. I'm a great trader. I can make more money. I can have a 10K day, blah, blah, blah. But I know that it's just gambling at the end of the day, because once the market closed and I think back on the trading day, it's like, dude, you just wanted to get back in and feel that high. You didn't want to make more money. You just wanted to gamble, which is true. So, exercising that discipline muscle and not getting back in the markets. That's been a new challenge that, I'm happy to be able to face and overcome. And I think that's all you really need. And journaling is probably like a really good one. Journaling is really good. Journaling is very good. When I was on my win streak, I would journal a lot. I will admit that I don't journal as much. And the reason why the reason why I don't journal is because I feel like I don't need it, which is not true. It's not true. It's just that I just feel like I don't need it. Now, what I do is in the morning, I do remind myself of why I'm trading. It's not a trading journal, but it's a goal journal where I remind myself that, I'm a good trader. The reason why I'm able to be consistently profitable is because I put in the time I put in the time analyzing these charts. I've made the mistakes. I've taken the risk. There were some wins, there were some losses. And I have the right to trust in my analysis. It's one thing that I've learned is that you have to talk to yourself in a way that convinces yourself that you are worthy And the reason why you have to tell yourself that is because obviously society, we're taught that if you don't have this, if you don't have that, then you're not quote unquote qualified to do these things. And as humans, we fall victim to, well, if professional traders aren't consistently profitable, which they are, but for whatever reason, that's what we think. Then how can I do this if everybody else ain't doing it? And it's easy to fall into self-doubt. So you have to constantly remind yourself that you are a good trader. You have the ability to learn and to get better. And you will do that and you will prove that to yourself by doing it. Because the one thing that the mind loves to do is to fill its self-prophecies. Self-fulfilling prophecies are definitely true. If you tell yourself that you're a bad trader, you will fulfill that prophecy. If you tell yourself you're a good trader, you will fulfill that prophecy. It's whichever trader you want to be. So that's what I do. I don't journal my trades, but I just remind myself of who I am, why I get on this stream, what my goals are, and things of that nature. So well, yeah, I guess, what I meant more is like, I don't have a trading journal. I don't document my trades. I don't say that, well, I'm getting into this because of that. I don't have a trading journal anymore. I have a journal. Yeah. So. It says whether it be real estate. Yeah, I mean, y'all guys see it. Well, I mean, I have these tendencies when I get in the sim. When I'm in an eval, I mean, obviously, I try not to have these things. But when I get in the sim, I do. I don't think twice about a trade. I'm in the sim. It's supposed to be mostly for practice, fun, and I'm not overthinking. What I will say, there are. So I do have not necessarily logical errors sometimes. It's just emotional errors that I will make. Like, I know that, okay, so like as an example, I think this was probably an emotional error on my part. Like this right here, like this drop. When I scaled into this position, I had a feeling that this was not going to move past this block of liquidity right here. And that's kind of, and I don't have it on the ES, it's just the Nasdaq. I don't have these problems on the ES. The ES is straightforward. You know she's not going to do it. But the Nasdaq, there's that 1% chance that she will do it. And because of that, those usually cause emotional errors in my trading. Because I scaled in and I was going to get out right here, but I think I moved my targets up. I think I moved them up, if I'm not mistaken. And then when it came down, I moved my stop. So those are like the small little errors that I have to kind of weed out of my game. Or, I mean, they shouldn't be there in the first place, but kind of weed out, because I should have moved my stop and I should have trusted that the market was going to stop at this block of liquidity. It's there for a reason. You can see that the bears were shorting this area right here this whole time. But because, we had that big pop, I was like, oh man, the Nasdaq's going to go. Let me move my targets up and let me completely disregard this block of liquidity. And I do that on the Nasdaq. I won't do that on the ES, but on the Nasdaq, I will. I will do that. And I did it before the stream as well. So I was in this short at open. I could have got all my targets hit and left a runner. But what I did was, because I thought that, oh man, this thing is going to probably drop some more, I moved all my targets down, and I think I was up. So I was in at, I think 30.33. I was in at 30.33. Actually, let me look at my my execution log real quick. Let me look at my orders, because I had to close a winning trade, or I had to close it. It was up like 4K, I think. All right, so I was in at 340. So I was in at 340 right at open. And it got all the way down to 271. And so I was up 69 points on 4 mini contracts. So I was up $5,500 at the peak of this move, because I didn't take any profits. And when I came back and I saw that the market swept this liquidity right here, because I was looking for the market to break this low again and to possibly get down to about 160 and possibly 120. And that's what I was looking for. But then when I saw that the market swept that low, wicked, and created this bullish engulfing candle, emotionally, I didn't want to close this position. And because of that, obviously, I had to close a winning trade at break even +1. And I had to flip long on this. I had to flip long on that, because obviously now the bulls has taken control. The bears have given this up. And now the market is going to make its rotation higher now. And unfortunately, what the bears did today, is create all this area for their buy stops to get taken. And if the bulls taps anywhere into this area, we're going to get a range breakout, and we're going to start trending again to the upside. So if you're one of those bears that has not taken profits yet, hoping that the market is going to stop, the market has already created the liquidity to go to the upside. All these stops above these highs are buy stops. And once we get a break of these highs, the bulls are going to pile in and we're going to start trending higher. That's what the market does. And if you look at it from a higher time frame perspective, you can already see it. You can already freaking see it. You got your range. You got your failed breakout from the bears. They failed, and price traded right back into this range. And so because the bears failed, the only thing now is that now if the bears don't come in right here, if they don't come in right here, we already know what's going to happen. And you see all this room. You see all this space that the market has. It has a lot of space to the upside. He says, what level indicators I got on there? These are volume profiles, and this is just the highs, the high of day and the low of day. That's all these are. The high and low of day. And don't ever let nobody tell you that the high and low of day of any particular day is not important. because what I've found in my studies as I analyze the charts, these high of days, you see how this low of day turn into this high of day and this high of day and this low of day. The market remembers where the liquidity is. It always remembers where the liquidity is, obviously. That's all these levels are. And as I go back and I look at the formation and where all the lines are, I can kind of start mapping out where the market could potentially go to. Like right here, I think this is a good example of like right here around that area, that 720 level, the 700 to 720 level. You can see that the market has just been trading in this range. And right here, that 700 level, this was about, the low right here was about 640, 800. Yeah, these levels let me know where I should focus my attention at and where I should put my targets. Yeah. I kind of wish I was paying attention to the ES today, because I would have shorted this move if I was paying attention to it. That 965 level. If I was paying attention to it, I would have shorted it. Because where is it? Because of this liquidity right here, or this area, this value area high, 960, 969. I think what 970 that one day. And the ES is very notorious for this. The Nasdaq I think about like 70 to 80% of the time is going to respect it, but 90% of the time on the ES, she's definitely going to respect it. Definitely going to respect it. You had 962 right here the previous day where we got that bounce. And this is where I would have looked for a short yesterday. And like I said, I kind of wish that I was paying attention to it, because I would have shorted that for sure. And you can see that the ES is notorious for doing this right here, selling that retest right there. So y'all guys can see it. She's very notorious for doing that. That's why I call her easy money, because I mean, she's not going to lie to you. She's going to tell you where the liquidity is. I mean, if you're not going to trust it, then she's just going to leave without you. But she gave you plenty of opportunity to short at this level. Once, twice, 3, 4, and 5 times to short at that one level right there. That's why I was kind of, well, I mean, like I said, I made the 9K at Nasdaq and I walked away, but I wasn't paying attention to the ES. But if I saw it, that's where I would have shorted. That's where I would have shorted. And right here, 965, you can see that these levels just reoccur. But I mean, he says, which platform has a volume profile on? This is NinjaTrader 8. This is the only platform that I use to trade futures, is NinjaTrader 8. It's a very powerful platform. Very powerful. And these red and green lines it's called a super trend indicator. I think I think it's free. You just have to download it on the Ninja Trader 8 store. You just have to download it from their store because I think it's like a custom indicator that I guess the creator put it on there for free. This is the same indicator that if you watch Think with Bookmap, this is the same indicator that's on the Bookmap. The one that has the stop dots, and you're supposed to get in as close as possible to these green lines because supposedly this is where people got their stops. So you can actually get in right here and put your stop underneath it. And if the trend is real, then price should never come back to these stop dots. So you can trail your stop as it goes up. You can trail your stop like that. It's called the AU Super Indicator, I think. Yeah, the AU Super or AU Super Trend U11 indicator, and you have to go to the Ninja Trader 8 store and download it. Yeah, no problem. You said, yeah, we can look at yeah, let's look at YM real quick. Let's look at YM. See Bitcoin, what she's doing. God damn, look at that drop on Bitcoin. God. All right. All right, well, YM is not on that one. Let's see if it'll load. But obviously YM is not on December's contract. Yeah, I like YM. I think YM is a great mix between the Nasdaq and the ES. She trades like the ES and moves like the Nasdaq. I think that's a great combination. But obviously, you mess around, you'll definitely find out what the you definitely find out. The one thing that I like about YM is that she's another instrument that does not lie. She doesn't do too many of the fake outs. She doesn't do too many of them. You see a nice double top, you can expect to drop, double top and drop. You got price breaking out from a range. And then you start to see the trend out when it moves out of that range. Then it begins to trend. And then it came right back into a range. And then we got your failed range breakout right here. You got your failed range breakout right here. And they failed to break out of that range right here. And you can see it. They broke out. They tried to buy the retest right there and tried to pull out and was unable to do it. So price got sucked right back into that range and they rejected right at the bottom of that range. But then they failed to break out of the range. So they got the price to go right back into it. They tried one more time and price went right back into that range. So right now it seems like the market is going back and forth with this range right here. Yeah, it looks like this market is hugging up on this range. Like it seems like the bulls thought or the bears thought, well, shit, they failed to break it out. That means price wants to go lower. And they tried and they failed. They tried again and they got stopped out. And you can see the sweep above this high right here. You see the sweep of liquidity above that high. And as they got swept, you got that move right back down. This thing stair-stepped its way up. But obviously, this range right here, it's what's dictating the market direction right now. So if I were to be a betting man, if the bulls don't find support above right here at S3, right where S3 is at, like really at the top of this range right here, if they don't find support, we could see that move down. We could see that. And possibly a move further down. Because right now, the market is basically trading in this one big giant range right now. Mm. Mm. Yeah, I mean, if you're trading YM, I'll see what they do at the top of this range, right around 785. Let's see what they do here. If they can find support, then I'm pretty sure that we can see a breakout. But if not, then we'll probably just keep rotating back and forth around this range like price has already been doing so far. But I'm pretty sure that the bulls will be successful because it is making basically higher lows, basically. I guess what you don't want to see is for the bears to break. Yeah, this is probably, they're going to probably, I think they already bounced it here. I think they probably already did. Yeah. Yeah, I mean, the way this is looking, they're going to probably buy this retest. I mean, they've already bought the retest. It's, are they going to hold the retest? Are they going to hold it? That's the question. Are they going to hold this? Because they've already bought it. And if we can get a move above this high, then I guess R4 is definitely going to be, yeah, R4 is literally right here at this high. So obviously not financial advice, but that would be a great target. That swing high right here would be a good target right here. So this little range right here would be a good area for a target if we do see that breakout. And if we do see that breakout, this will be a good area. Yeah, but we'll see. Yeah, that is, yep. That's it right there. Yeah, that is it. Were you able to find it, Rose? Yeah, I think the market closes early. Well, I don't think that's what's actually happening. Um, but the Nasdaq, if they don't hold this, so this is what I think is going to happen, and I do appreciate that, David. This is what I think is going to happen because this is potentially a strong low right here. I do think that the bulls or the bears will probably try to knock this thing right back down, but the way this thing is looking, if they don't hold this, if the bears don't hold 360, because we all know that 360 has just been an impossible level for the, it was an impossible level for the bulls to get above. If the bears don't hold this, and I think 380 was like the last line of defense right here at R2, if I'm not mistaken, 380. Because it was like 360 and 380 was just a nightmare for bulls. Like the price just kept getting rejected. Let's look at that. Yeah, it was like 360, 370-ish. Yeah, 360, 370. So we'll just keep 370. Was it 380? Yeah, and 380. Yeah. It was just a nightmare for the bulls to get over these two levels. So if the bears can hold this, then the bears have an opportunity to knock this thing back down. But because this is generated liquidity or engineered liquidity right here above these highs, if they don't hold, we already know what's going to happen. We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, at least 13 layers of buy stops above this high. We have non-farm payroll when we come back on Friday. So this is going, I believe non-farm payroll is obviously going to be the make or break. Obviously. If we get a move to the upside, we have a lot more room for upside than for downside, unfortunately, for the bears. We have a lot more room for upside. We can come back to 800. We can go back up to 570, 720. I mean, we have a lot of room. It's looking like this area has been support for the bulls for a very long time. You can see that they found support here, 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 and tonight or yesterday here. And we got a double bottom right here. And technically, this is a higher high or a higher low, technically. So that's going to be tough for the bears. Now, NVIDIA, what I think is going to happen with NVIDIA, because obviously NVIDIA moves this market. I think non-farm payroll, I think we see a dump from NVIDIA that's going to get immediately bought back up. If non-farm payroll dumps the market and NVIDIA touches 130, it would not be here when the market opens at 830. We will see a gap up, and I know it. 130 is a level where people are obviously going to buy NVIDIA. Now, the only hope that bears have is that we get a break of 130 on NVIDIA, which I highly doubt. I mean, everybody and their mama is waiting on a drop on Nvidia right now. This drop is going to be seen as a gift. So I don't think that Nvidia is going to stay down for too long. If we do see that drop down back down to around like 130. So we'll see. We'll see what happens. But that's my current thesis right now. That's what I'm looking for with Nvidia, is that 130 level. Yeah. Yeah. Actually, let me just do that now. Let me see if I can find it, so y'all guys can have it for yourselves. It's the AU super trend U11 Ninja Trader 8. Now, obviously, this is on the Ninja Trader store, but it's not made by them. So, I mean, if you download it onto your computer, you gotta obviously accept that risk, obviously. But this is, let me see if I can put the link into it. Where is it at? Let me find it. Mm. I'm not gonna, I mean, if I can't immediately find it. Yeah, it probably won't. I think. So it's showing me it, but for whatever reason, it's not giving me a link to the store itself. I don't know why. Or maybe it's not giving me a, it's not giving me to the, oh, I think that's it right here. All right, so yeah, this is it right here. I'm gonna paste it in the chat for anybody that want to use it themselves. Again, this is not a link, or this is not a package made by Ninja Trader 8. This is a this is one made by someone in the community that put it on their store. So if you're gonna download this, accept the risk. All right. All right. But I think so I guess right now they're holding it. It says type Ninja Trader super trend. Give me a second. It says Ninja Trader super trend. Okay, I think this might be it. Okay, yeah, I think this one might be it right here. Okay, yeah, my bad. This is the one right here. This is it. Yo, thanks for that. Thanks for that. I think this one is it right here. I think this is the one. Yeah, this should be the one right here. This is the same thing. Yeah, AU Super Trend U11. Yep, that's it. Yeah, thanks for that. Yeah, okay. So yeah, that's what I use on mines. And as you can see, I don't need to I didn't need to adjust it or anything. It just works right out of the box. And you can see historically that if you followed it, you trailed your stop, it literally allowed you to stay in the trade as long as you followed it. But we'll see what the Bears do here. I mean, with that failed breakout from the range, usually failed breakouts lead to the other side of the market making an attempt to break out of the other side of it. That's usually what I see with failed breakouts. That's usually what I see with failed breakouts. I guess we're gonna have to see what the European session, what they do when they come in, what direction that they want to trade the market. I mean, I look at SPY, and I'm trying to. I try to see which way, because I mean, obviously we could see a bounce here. We could. I just don't. I mean, if we do see a bounce, it would probably be short-lived though, because the market has already made the pattern. You got a double top at the highs, but I guess it did tap into this area of support. You do got that strong low. You do got that double bottom right here on SPY. And you do got that double bottom on SPY. This is technically a higher low. Technically a higher low right there. Yeah, we're gonna have to wait for non-farm, unfortunately. It just sucks that the market is going to be closed tomorrow. It's going to suck because that's literally a whole trading day that is gone. A whole day of price action that we're not going to have on the charts for analysis. And everybody's going to have to start doing their analysis as soon as non-farm happens. David, no. All I trade is tick charts. I don't even have a, well, let me rephrase that. I do have a time-based chart, but it's only the 60-minute, and I'm only looking at the 60-minute for direction. That's what I use the 60-minute for. That's it. Everything else is tick-based. And you say that you're long. You got 3 long from 331. Hey, I mean, shit. The Bears failed. to break out of this range. In my opinion, I think the longs will work. I think the longs gonna work tonight until it gets to about 360 or somewhere around there. And I mean, even though the market is gonna, honestly, I thought we would have more volume tonight with the market closing at 8:30 tomorrow. The futures market closing at 8:30, so we're gonna have a New York close. As crazy as that sound, a New York close, crazy. But I think, hold on, has that ever happened before? Have we ever had a New York close? I think this is the first time that the equity markets have closed at 8:30. I think this is the first time that this ever happened. There's no records of this happening before, unless I'm mistaken. I'll ask ChatGPT, and if it doesn't give me a good answer, I'm just going to make the assumption that this is the first time. Yeah, so I, unless I'm mistaken, I can't find anything that would suggest that this has happened before. So I thought we would have a lot more volume trading with the market closing at New York open. But we're still having the average amount of volume. Yep, Jay, and that's completely correct. Risk management is, I mean, as long as you're okay with how much you're risking in a trade, go for it. But over risking and losing more money than you plan to lose is definitely a no-go. Definitely. If you want to elevate your game to being a professional trader, as I said earlier in the stream, we have someone that joins the stream. Like I said, I think he's an oligarch. He says he trades 200 contracts, and he shared that with us today. And the psychology that you have to have, the risk management that you have to trade heavy size, you really don't have room to question, room to move your stop. If you're wrong, you have to execute. You have to get out of that position, because I was in the sim with 200, 400 contracts, and being up 6 points, I was up like 30K. Let's actually look at that, for, I'm gonna close this. I want y'all guys to see what I saw earlier today. And it really changed it literally opened the door for me. It opened a new door. when I saw the P&L for 200 contracts. When you got this much risk on, if the market is not moving in your favor, look, I'm barely down a tick. Look how much my P&L is moving, being in 200 contracts. That right there, being down $9, $10, $20,000 in a small move. Yeah. If you want to get up to this level where you're trading 200, 115, however many E-mini contracts, you have to have your discipline on point. You have to have it on point, because look how much I'm already down. I'm already down like 12K. I was up. Honestly, I don't remember how much I was up at the peak, but one of his rules is that he doesn't allow he doesn't allow price to come back to his break even once he's in that trade. And until I did this morning, I didn't even see. I was like, why would you do that? As soon as I got in, I think I was up 20, 50. I think I was up 100K on maybe like a 10, 20 point move. And I was like, wow. So these are the numbers that the big boys, the people that actually move this market, these are the numbers that they see. And I was like, wow. And if I want to get to that level, I need to start trading like that. Getting out those losers, having a 1 point stop loss, having a few tick stop loss, and being able to get back in. Yeah. So that was a real eye opener for me today. Obviously, I wouldn't recommend getting in 200 contracts unless your portfolio can handle that, obviously. Okay. You know what, Jason? My trading partner did the same thing. My trading partner had the same strategy. He would make $1,000 a day and walk away. He walked away from his desk and he was good with that. And it's no surprise he grew his account. It wasn't until he stayed in the market longer. And again, there's nothing wrong with this. As long as you got a plan for your growth, there's nothing wrong with it. I feel that as soon as there's no longer a plan and you're going in the market and you're just trying to see how much you can make for that day, I think that's where traders get in trouble. And I'm saying this obviously through personal experience, obviously. I mean, y'all see that shit. I be up and then all of a sudden I'm down, or I'm trading on tilt because I was up 5K or something. And now because I overtraded and I got overzealous, now all that money's gone. And now I got to get that money back. And obviously, if you're in that I need to get that money back mode, you're trading on tilt, obviously. But as long as you got a plan, I think there's nothing wrong with growth. There's really not. Yeah, we'll probably won't get any movement until London. Well, yeah. I think so. I think what he was saying was, you know, like how when you get those momentum pushes, and as soon as you get in, and you see the market move in your direction, like if you're in at your level and you see it and you get in, and you get that the momentum play, having price come all the way back down to your break even, I think that's probably what he meant. Not necessarily having the market chop, and the market's chopping, kind of like what I said earlier about the big players. They wait for the breakout and then they get in, versus having heavy size in this chart. Just imagine having 200 contracts while the market's doing this. Yeah. And I don't think anybody that plays big would trade this. They're trading the edges for sure. I mean, their money, I mean, it's better work for their money for them to trade the edges versus trying to get in at the middle. Yeah. You said more screen time is boring? Yeah, I will agree. I mean, it's not boring. I feel, well, for me, my bad. For me, it's not boring. I feel like what happens for me when I look at the screen is just mental fatigue. Instead of thinking about my trades, I just start taking them. It's my trades become more impulsive when I start to do things like that. So that's why I think, I don't think I, yeah, I think I told y'all guys, I have a strategic break that I don't look at the markets from the first time I look at the markets in the morning is at around 8:20. So after I get off stream, I strategically move away from the desk. I may look at it on my phone in terms of, okay, what the market is doing. But the first thing that I do when I wake up in the morning, that's when my strategic break starts. The first thing I do is go to the gym, get ready, get up, get ready to go to the gym, do my morning routine. I don't look at the charts. My rule is I don't look at the charts. I don't see what it's doing, because as soon as I look at the charts, I'm already locked in and I'm going to try to look for a trade. So I completely cut the charts out of my morning routine completely. I go straight to the gym. When I come back from the gym, I'm writing in my journal. I'm reminding myself I'm a good trader, why I'm trading, where's my what my trading goals are for the year, what I want to accomplish, and I'm writing that down consistently every day, reminding myself that I have a right to be here. I put the time in to be here. I've executed. I made the mistakes. I've learned from my mistakes. I deserve to be here. I'm worthy to be here, and I'm here. I remind myself of that every day. After that, I eat my oatmeal. I take my my meditation, my quiet space. Just think about how I want to execute what I want to do for the day, how I want to improve. And that's when around 8:20, that's when I first look at the charts. I don't look at the charts before that. And I feel that having that strategic break from the charts allows me to come in without a bias and improve the best of my abilities. And that's been working. The one thing, I think I said something that I want to say before I get off, that bias thing. I'm not going to sit here and say that I'm 100% don't come in with the bias, but I will say that having a bias in the market before even looking at the charts is dangerous. I see it in myself. Like if I have a bearish bias, I've found that I look for a reason to be bearish, even if the market is not. I think one of the biggest things that I was able to overcome, or starting to overcome, is just looking at the market and seeing what it's doing. And even if I don't like that it's bullish, I like making money. I like being green. I need to make sure that I'm taking the longs and not trying to get into the shorts, and vice versa. So I think that's very important. Something that I should share before I forget, or I don't say it. So, or I don't emphasize. Oof. Yeah, that's my morning routine. What's up, Mohammed? Oh, my bad. What's up, can't wait. What's up? Yeah, yeah, I hate that. It does. I feel that if you're chasing the market, you might be on the wrong side of it, or you're going to find yourself on the wrong side of it. But if you let the market come to you, yeah, 9 times out of 10, the market is going to come to you, is going to give you a nice big hug, and it's going to go away. Kind of like right here. If you had your limit right here at this low, then the market gave you a nice big hug and it ran away from you. Versus if you chased it, you wouldn't have got obviously this big move. Cause I think this was like what? I mean, if you got in at 290, yeah, so that's almost like a 290, it's 10. It's about like a 57-point move up so far. And I think this is a good example of watching and making sure you know where your low of days are. Because I mean, if you got in at the low of day, you only had 8 points of drawdown. You only had 8 points of drawdown if you got in at that low of day on Monday. Or was that Tuesday? Yeah, that was Tuesday's low of day, my bad. Tuesday's low of day. Yeah, Tuesdays. The market thanks you for your donation. The market thanks you for your donation. But all right, guys, that's all I have for tonight. Obviously, the market is going to close at New York, so obviously we won't be coming back at New York open. It'll be New York close. But we will be coming back at 5 o'clock or around the same time tomorrow night. And we will prepare as best as possible for a non-farm, obviously. But yeah. But all right, guys, I appreciate you guys joining, and we'll come back and we will earn some more money. With that said, peace out, everybody.